Wall Street spends billions of dollars every year on algorithmic models, high-frequency trading networks, and pure quantitative analysis. It looks like a perfect machine of rational math. Yet, beneath that calculated surface, a surprising number of the most ruthless financial titans in history openly relied on something else to place their trades: the positions of the planets and stars. Even J.P. Morgan, a man who personally bailed out the United States government and consolidated modern American industry, reportedly turned to astrological forecasting during his later years. This was not an isolated eccentricity. By the early 20th century, famous traders like W.D. Gann formalized these practices into a specific discipline known as financial astrology, building complex forecasting models based on geometry and celestial time cycles. Which presents a serious question. Are highly successful billionaire traders delusional? Or is there a measurable signal hidden inside this ancient superstition? Financial astrology operates on the premise that planetary movements align with shifts in mass human psychology. Practitioners take the specific qualities assigned to planets and map them directly onto global economic sectors. This table lays out exactly how that mapping works. Monday is ruled by the moon, associated with emotions and the home, so traders link it to consumer goods. Tuesday belongs to Mars, the planet of courage, linking it to defense. To find out if this framework actually translates to profit, a major study published in the Journal of Finance Issues stress-tested the concept. Researchers analyzed nearly 300 large-cap stocks in the S&P 500, grouping them into portfolios based on their initial public offering dates, essentially the stock's exact astrological birth signs. They tracked those portfolios over 20 years, looking for any sign that an Aries stock behaved differently or performed better than a Taurus stock. The data showed zero economic advantage, there is no predictability, and zero outperformance. Treating equity investments like a daily horoscope is mathematically useless. At first glance, this proves the skeptics right and closes the book on celestial trading. But while sun sign horoscopes completely failed the data test, the phases of the moon managed to pass it. A comprehensive study from researchers at the University of Michigan looked at stock market returns across 48 different countries, specifically tracking daily performance against the 29.5-day lunar cycle. This chart graphs the finding. The left bar shows returns around full moons, the right, new moons. Returns drop consistently during full moons. This daily difference compounds massively, translating to a 3 to 5% annualized return difference. This is a robust statistical anomaly that appears globally. Traditional asset pricing models, which assume that all investors act completely rationally, cannot explain why it exists. The cause of this drop isn't some magical gravitational pull from space. It comes down to human biology. Extensive medical research shows that full moons can disrupt human sleep patterns. Poor sleep leads to negative moods and increased anxiety. When traders feel deeply anxious and exhausted, they become highly risk-averse, opting to sell off their volatile assets. We see the exact same biological mechanism play out during the winter months. Reduced daylight triggers seasonal affective disorder, which measurably depresses investor mood and correlates with a drop in stock returns of about 1.5% annually. Pure cultural superstition produces a similar drag on the market. On Friday the 13th, the fear of an arbitrarily unlucky day significantly alters trading volumes as anxious investors avoid taking on risk. The stock market is not a calculator. It is a system operated by human beings, heavily driven by their biological exhaustion and emotional irrationality. When enough irrational humans gather in one place, their shared beliefs begin to dictate the reality of the market, creating a self-fulfilling prophecy. The mechanics are straightforward. If a critical mass of traders genuinely believes that Mercury going retrograde signals a period of high volatility and market crashes, they will proactively sell their stocks. That collective panic selling actually triggers the exact crash they were afraid of. Highly complex systems like financial astrology or Gann theory serve as psychological anchors. By overlaying a strict, orderly grid of geometric angles and time cycles onto wild market swings, traders manufacture a false sense of control over chaos. Thousands of years ago, people looked to the stars to manage their fear of unpredictable weather. Looking at a trading floor today, surrounded by thousands of people shouting over ticking numbers, That psychological need to find a predictable pattern hasn't changed. A completely fake narrative functions exactly like real empirical data, as long as a large enough portion of the herd acts upon it at the exact same time. The scientific validity of whether planets impact the economy is entirely irrelevant. The only thing that matters is accurately measuring the belief system of the other participants trading against you. Treating the stock exchange like a purely mechanical, rational machine is a mistake. It is a highly sensitive social system that reacts to narratives, sudden shifts in moods, and human biological rhythms. You don't need to look for financial answers in the stars. You need to analyze the psychological state of the herd moving around you. Embracing human irrationality, instead of trying to model it away, is the ultimate edge in understanding how financial markets truly operate.